Good morning, it's Nick Hayton here. I'm just on my morning walk and I've got the dogs with me this morning, so let's hope things don't kick off. What I wanted to talk about today was investing, the investment community, and if you're an entrepreneur, if you're a founder, what's the state of play? How easy is it to raise capital, given we are hopefully in the final throes of a pandemic, which, if it's anything to go by the Spanish version, the Spanish flu, the outbreak just after the First World War, it did go on for a couple of years, 2 or 3 years. So, we may well be more than halfway through. But anyway, let's look on the bright side of things and think about investment. There is a huge amount of capital flowing at the moment. There is an enormous amount of capital that's been pumped into various economies and banking systems. The Trump administration, in various attempts to influence the outcome, pumped trillions of dollars into the US capital markets, which is now really washed with capital. The Middle East has been a particular favourite of mine over the last several years because they are a consistent allocator of capital, and in particular they love tech, which is my favourite, of course, which we'll touch on in a second. But then there are lots of hotspots of capital. Asia is recovering pretty quickly. A good temperature gauge of the recovery of economies is actually the travel industry. Airlines are now starting to fill up again. Try and get hotel rooms in certain parts of the world is very difficult, and Airbnb is the platform's lighting up, I think, because people are seeing opportunities to get away, but not necessarily mix with huge amounts of people. So what's the deal? So I'm a founder, I'm an entrepreneur, and I need to raise capital. What should you be doing? Well, quite frankly, it's the things you should be doing anyway. Just because we're in lockdown, many people think that it's much harder, in a sense. Well, yeah, it is still tricky, but actually the people that you're trying to get hold of, the VCs, the private equity guys, the families, the ultra high net worths, they're actually sitting behind their desk in their home office, so they are, in a sense, more available to have conversations, not less. And they have more time on their hands. They're not commuting to the office like anybody else. And therefore, I would argue it's much easier, in a sense, to get their attention, which is, at the end of the day, what it's all about. But there's been some notable shifts in investor behaviours, actually. And it may be a sense because we've all gone on to Zoom and WhatsApp. The attention span of the investor community seems to be less and less. And I know that's a factor of younger people maybe, fronting the analysis of, these early deal flow. But at the end of the day, it seems that the long pitch deck is almost long gone. And you have to think of other ways of encapsulating your proposition, telling your story, but do it in a way that you can get traction much quicker. So the attention deficit syndrome of global economies at the moment seems to be, if you can't get your story away and you can't get your point across in under a couple of minutes, then you're going to struggle. And in certain regions of the world, of course, they just don't like reading pitch decks. And I have to say, that we'll touch on that in the next conversation. So it's all good out there, but you have to be smart. You have to have high levels of energy, and we'll get into in the next conversation. We'll get into the do's and don'ts and the other aspects of what you can do now to raise capital. Talk soon. Bye.